in the Dukascopy TV studio in Geneva, we are talking about the outlooks and the strategy for impact investments with Mr. Fernando Scarpati. He is Senior Partner and Private Equity Director for IMC Consulting International. Welcome to the studio.
Thank you, Ian.
So we just talked in the first part of this interview about the relevance of impact investments. So let's look beyond. So where do you see the best opportunities for impact investment in the next 3 years?
Yes, I think the main sectors are going to be healthcare, clean energy, solar energy, for instance, renewables energy, social housing, pensions, just to name some sectors. But I think the future, there are very good opportunities in those fields. Also because, not only because these deals are very profitable, but also because there are some benefits from the government in some countries.
And if you look to the market, so where do you see the market of impact investment evolving in the next years?
Well, I think it's going to grow. Till now, it was growing at a rate of 20% per year. Yeah, so I think that will increase. That will increase because investors are changing the way they think, entrepreneurs are changing the way they think, and the same for GPs. Yeah. So they are looking at strategy, they are looking at concept, mission, as I told you, and not very much at the traditional model of capital asset pricing model.
So how do political measures and maybe also outcomes of international negotiations contributing to this?
Well, the first country which started to implement policies to benefit impact investment is the United Kingdom. Yeah. And they have started with tax reductions, with loans, and some other tools. Other countries in the European Union are following that policy simply because the interest of the government is to reduce the negative effects of CO2 in energy or social negative impacts. Yeah? So I think the future in this sense will help a lot to the industry of private equity funds.
What are the most important factors to consider when making a deal in impact investment?
Well, I think the first thing to consider is this concept that financial returns should be correlated with impact investment. Otherwise, we are falling into philanthropy, as I told you. So that's one of the first concepts. Second, I think a strategy is probably the main driver now. The concept and the strategy of the fund is probably the main driver. To define a good strategy, a budget, to deal with return and impact investment. In the past, before 2007, before the crisis, we were all looking at capital asset pricing model, financial returns, etc. Now investors are looking for other things like strategy, mission, concept, etc. So I think that's one important point. And so there is a figure I brought to show you this strategy approach. This is a study made by IMC Business School of Barcelona. Yeah? And we have in the epsilon axis strategic approach, high and low, and the correlation between impact objectives and financial returns, as I told you. So the interpretation of this figure is that when we are over the success line, investors said they fulfilled their expectations. Yeah? And that could be because when we have a high correlation between impact investment and financial return, private equity funds concentrate a lot in strategy, because they have to care about return and impact investment. The other thing, also important, is that risk is becoming less important. Investors are starting to look at returns independently from risk. Yeah? I'm not saying with this that risk is not important. Risk is very important, and we will also have to assess risk in any investment. But the trend is to give more importance to returns. Okay?
And so if you just talk about risk, so actually what are differences in terms of traditional investments when we look at risks in impact investments?
Okay, as you know, Daniel, all investments have risks like illiquidity risk, like size risk, like illiquidity, like capital asset pricing model, etc. So the same is for impact investment. So what kind of risk we can have in impact investment? Well, first of all, the potential negative impact in the environment or in the social world. Or another obviously risk is not to be able to achieve the target of the positive impact investment we budgeted at the beginning of the investment.
Mr. Fernando Scarpati from IMC Consulting International, thank you very much for being here today.
Thank you, it was a pleasure.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a good day and see you next time.